welcome to another episode of the Do Big podcast. The investing experience is being reshaped by AI personalization and a shift towards investor centric solutions. As fintech moves beyond access to intelligence, platforms like MyFi and Tiffin are reimagining how people invest, engage, and grow wealth. Today, we dig deep into what's powering this shift from AI driven tools to smarter investor journeys. Joining us today is Kiran Nambiar, CEO and co founder of MyFi and partner at Tiffin, two companies at the forefront of fintech innovation. With MyFi, Kiran is building a personalized guide to help individuals become better investors, while at Tiffin, he's scaling intelligent experiences that blend investment science with cutting edge technology. Whether it's creating conversational AI assistants or rethinking investor workflows, Kiran is focused on delivering intuitive, high impact tools that empower the modern investor. Kiran, once again, welcome to the Dubik podcast. And I thought we'd do a quick rapid fire kind of a round to break the ice. Just a few quick questions to kick things off. And my first question to you is if your startup journey was a financial strategy, what would it be? Would it be bold, high risk bet or a steady savings plan or a balanced portfolio?
Bold high risk, always bold high risk.
And why would it be a bold, high risk plan?
I think any startup is bold high risk, to be honest. There are perhaps things that you call lifestyle businesses that, is steady stream, but anything that you want to do that has large impact, high volume, reaches millions of people is always high risk.
Okay. And what's exciting for you? Do you like launching a new AI product? Do you want to watch an existing one suddenly take off? Where does the excitement lie for you?
For me, it's an existing one take off. I think there are a lot of new products in the market today, so really waiting for our product to take off further. So yeah.
Okay. And you've been a founder for a while. What's the most risky move that you've made?
In my previous startup, I it was COVID had just started, and we were around 12 people at that stage. About 3 4 months into COVID, we decided to take a 4,000 square feet office and expand our business when everyone else was kind of bracing for impact. I think that was probably the boldest thing I've done.
Okay. And did it pay off?
Absolutely. We grew our business to a 1.5 million revenue in about 18 months, and we also got acquired. So
It's
yeah.
fantastic. Congratulations. In the world of it, you know, in the world of investing, I just want to understand what do you see is the most amazing thing that's happening right now?
See, I think especially in India, after COVID and through COVID, the number of people participating in the capital markets, investing in sort of financial instruments has grown significantly. That has led to two things. One, obviously, more opportunity for people, but also when it comes to guidance, advice of any sort, it just hasn't been able to keep pace. So it has been extremely important uh, to get more products like ours, like MyFi, as well as individuals who are helping people with their investment journey be more skilled and help people directly as well. So I think that growth has not kept up when it comes to guidance and advice compared to participation in the markets. So that is something I'm hoping will change, and we're only a small part of that journey.
You know, so some businesses saw a huge spurt when COVID happened and things like that. A lot of the online businesses. And then things started to wane off and stabilize or come back down to maybe pre COVID times or a little higher than pre COVID times, simply because, you know, the excitement or the need that happened during COVID kind of has waned. Have you seen similar situations happening in your space, or has this, you know, have they stayed invested even after COVID?
See, in the financial world and retail investing, I think it's continued to grow. What has changed though is, I think if you invested in sort of 2022, depending on when, you threw money at the markets, any stock you bought, any mutual fund you bought, you're making money, right? There's no there's no way you were losing any money. So I think that that has changed in the sense that there's a bit more consciousness when you're investing in the markets, trying to find products that make sense for your risk patterns, where you are in life, and all of that. So there's a bit more consciousness towards investing. That has definitely changed, and I think for the better. Right, there have been some corrections in the market as well, which have helped people realize that markets don't just go up; they go down as well. So I think in many ways, while people have perhaps lost some money there, it's also a learning experience for people to realize that look, you need to be a bit conscious about where you invest and what you invest in.
So, if you, I know you're doing exceedingly well in India, but if you could expand MyFi into another country tomorrow, where would you like to go and why?
So, I'll answer that slightly differently. So, MyFi is a little unique in that it's part of a larger ecosystem called Tiffin. Tiffin is a fintech based out of the US. That is the company that acquired me in 2022. So, the reason and how we launched MyFi in India was also because of a lot of success that we saw in the US with a very similar product. India, we are seeing success as well. And Tiffin certainly has expansion plans in other parts of the world, and places we're exploring include UK, Middle East, Japan. We're at a very unique point in time where AI and conversational experiences are really transforming lives in how people interact and what they are able to do, right? So I think we're very uniquely positioned to be able to move fast in that space. And because our focus is wealth and finance specifically, the way we're able to approach it is also quite unique and specific to an individual investor. Whether we go through partners or go directly, our goal is really to have impact on as many lives as possible, and whatever we can do to achieve that after India, we will continue to pursue.
In times of uncertainty like we are in today, where every single morning you hear a piece of news which is going to impact I don't know how many countries at a time, how does the world of investing and how does the consumer in the space of investing kind of look at wealth and look at investing?
See, for your typical retail individual investor, um, saving and investing is a long journey. It's not about making money for tomorrow. It's not about making money for 6 months. It's really, how do you save money and allow that to grow over a multi-year period. In India, especially historically, we have done that through fixed deposits, gold, traditional assets, real estate, right? That has started to change quite rapidly over the past few years. So I don't think the fundamentals of how you approach this has changed. The idea is really you want your money to grow faster than inflation, right? Not just 5%, 6%. It really needs to kind of beat inflation because your cost of living is also going up.
Right.
So I really take a long-term approach. I would say minimum 3 years, if not five. Have different sort of pools of investments for different goals, retirement, college fund, a marriage in the family, whatever that might be, right? And you can have an aspirational bucket also where you get to play around with some stocks that you might be interested in. But you really take a long-term view on investing. Don't get tempted by make 10% in 3 weeks and make 30% in 6 months. It's a fallacy. It's not sustainable. Steady growth is certainly better than quick returns because it also means quick losses when things go bad.
My last question before we go into the next segment:
Hmm.
here's a generation and the younger generation. All your advice applies to people my age, right? What happens with the younger generation, which is a year and now generation, which does not necessarily is part of the gig economy, is moving jobs on and off, jobs are not happening, etc. For them, what happens? Because long term for them, if they're a year and now generation, we've spoiled them, we've given them everything on a platter. How does it work for them? The same advice or different?
Honestly, it's the same advice. I think that you know the earlier you start, the more you will save in the long term. And I know hundreds and thousands of people have said this, and the power of compounding is just, you know, you realize it only when you see it. So I would say, look, start an SIP, keep it simple. Um, and if you really want to play around and you think you can research and make more money, create like a basket of stocks that allow you to do that. So that's, I don't know, 5-10% of a portfolio. You decide what that number is, but have a steady investment base that you're not playing around with. You're not kind of, trading in and out of. Buy some mutual funds. Keep it simple if you're not a seasoned investor, and that's it. Just invest and forget. That is the best thing you can do. Right? I have had, one of the things when we launched MyFi initially, the most important feature on there is connect your portfolio, and you can see all your assets in a single place, right? Which is quite powerful. So a lot of people we interviewed after that in the early days, uh, the thing that resonated the most and kept coming back is, oh wow, I didn't realize this is so much money, right? This is an investment they may have made 5 years ago, 10 years ago, and just completely forgotten about, and they suddenly have this wealth in their pocket which has grown, and they realize it's growing now, which kind of encourages that positive behavior of let it grow more, right? So unfortunately only time can show this success, but my advice to younger folks is no different. I mean, the only thing I would say is, fine, if you can't invest 30% of your savings, at least invest 10% of your savings.
Okay, that is sane advice. Um,
Yeah.
so that, do you want me to take a pause before we go into the second segment? How do you want to do it? Okay, great, thanks. Okay. Kiran, we're into the second segment of our conversation, and this is all about your entrepreneurial journey. And I just wanted to kind of understand what inspired you to start MyFi, and has that
Sure.
idea changed at all?
The roots and fundamentals of it have not. So, just quick background on me. I actually, left India when I was 18. I studied in London, then worked there for a bit before moving to New York. Uh, Started at Merrill Lynch, then moved to Morgan Stanley. So around 2012, 2013, started toying with this idea that, people in India need help with their finances and wealth management. Really stemming from the fact that, very close family members of mine who had invested in mutual funds had no idea what a mutual fund was, right? I mean, I'm talking to these people in 2008, and they're like, oh, I used to get all these dividends. I don't get them right now. What they don't realize is we're in the middle of a financial crisis. Their investments are probably worth 30, 40, 50% of what it was. And there's a long road to recovery. So the level of understanding of what they were doing was so low, right? And um, at that point there was absolutely nothing to help them digitally, right? There was few platforms out there that would show you prices and things, but really nothing to tell you and nothing to explain what was happening. So at that point I really wanted to build a platform that would help people understand their investments better, help them invest into the markets more, and just manage that digitally, because in India, let's be clear, there are too many people to handle this only physically, right? There will never be enough advisors to help the masses. So that's where the idea started. Uh, Today I want to say the foundation of that is no different, right? People even today lack the experience, knowledge, etc., to invest responsibly. They don't know whether they should do small cap, mid cap, large cap, flexi cap. There's so many options, right? Really, the idea is no different. I think what has changed though is the fact that Gen AI has come in a couple of years ago, and that has completely transformed the delivery mechanism. So now, as a user, I can come in and say, how are my investments doing? Or do you have any suggestions to improve my returns? Or are my funds too risky, right? You can literally ask questions and get answers to it. So that has changed fundamentally. So it's really the medium and the experience and how we can power this user that's very different. And what that also allows you to do is, you search for funds or you see some funds and then you see expense ratio 1.2%, right? A lot of people don't know what expense ratio is. So you can say, what is expense ratio, and have an explanation right there in line. So your education is happening in context, and we're not asking you to do some course on financial wellness, wealth management, investing, etc. So I think that has changed significantly.
And just out of curiosity, so while it has become easier for the consumer to ask these questions, has the engagement of the consumer gone up or gone down? Because to my mind, everybody is now just skimming the surface and getting some really shallow level of answers and taking decisions. Or is it that they're now, because it's easier, getting into deeper studies, figuring out a lot more about investments? Or is this, oh, this is nice, I know that much, and let's move on?
Yeah, I think there are two types of investors. One person who really wants to get into the depths of it, does not want to do mutual funds, wants to do only stocks, wants to research the stocks to death, understand why they want to kind of invest in something, what are the prospects, etc. So there are there's certainly that group of pro users who will always exist, right? And these are also the ones who will probably get more into derivatives and other products as well. But there's certainly another base that's growing where they want to invest. They don't know what questions to ask, but they want someone to kind of help them get that starter portfolio going, and want to keep an eye on it. So I think there are always going to be both sets of investors, right? Globally, not just in India. And the second set will, I would say, always be larger, because most people don't work in finance. Most people have full time jobs. They have other things to do. And really, investing in the financial markets is a way for them to responsibly save money and grow their wealth, right? So I think the number of questions asked, it doesn't need to grow significantly, but they need to be relevant. So if you take even our product, for example, when we started, we were averaging around 5 queries per user. Today we're at around 12, right? Of course, we're a new product. We've improved things and given people more capability, which has allowed for that growth. But it also means that people want to ask more questions. And even our user base is a mix, I would say, like an 80-20, 80% being your novice investor. So shallow investing, sure, maybe it does happen. It absolutely will. But our goal is to kind of help that investor be more educated and informed before they make a decision.
And did you start with certain assumptions when you started building MyFi? Did they work out? Did they not work out? Did you change any assumptions as you went along the way?
Yeah, so one of the assumptions is that, conversational experiences work, right? I want to say, while we started with that, we were a little hesitant when we started, in the sense that we brought in some traditional components to make the app feel not as conversational, but a little bit of, forms and, fields, so that people don't feel completely alienated. But what we realized is that, the world is changing, or changed. Um, People are very comfortable with typing. They're very comfortable with asking questions with ChatGPT, Perplexity, all these other products out there. People are using it more and more to ask questions. So we very quickly pivoted and went almost entirely conversational. So even if you look at our app today, I won't say we're 100% there, but I would say like 95% of things happen in chat. There's no sort of form that you need to fill out or things that you need to do that are more traditional in nature. So that is something that we certainly double down on after we maybe about 3 months after launch. And I think that's the way the world's going, right? People want to type or just say something, and things happen, right? And today, I want to say we have the technology to do it. It's just we need to make the experience seamless and amazing for a user. Like I want to walk into my house and say, "Hey, I'm home. Turn the lights on," or just just walk into the house and things happen, right? Why even say anything? So open MyFi and it just knows what I want. That's where we need to get to.
It's a slightly controversial question. I'm a researcher by profession, right? And a couple of years ago, when we were doing research in the space of finance and things like that, a lot of the men, we weren't talking to women, which is why I'm saying men.
Hmm?
A lot of the men liked having a financial advisor. Uh, and one of the insights we had or learnings we had was that if things go wrong, you can always blame the advisor. Right? So you put money
Yeah,
into something and it didn't do as well as it was supposed to. घर पे जाके you can always say उसने बोला. Types,
yeah,
right?
yeah.
What happens when you have conversational AI having giving you some advice or having directed you, etc., and you've taken a decision basis that? How do people tackle the fact that sometimes an investment does not deliver what it is supposed to deliver?
See, I don't think that is ever going to change. Whether it's human advice, AI guiding you, there is always that risk, and it's just human nature, right? Things go wrong, you want somebody to blame, especially in the short term, and then you may kind of realize, you know what, it's no one's fault. So I don't think that is going to change, even with um, tech-based products, AI-based products coming out there. So it's a reality we need to live with. I think we're not big enough yet that it's become a problem, but we will absolutely have to deal with it at some
Yeah,
point.
so my only fun question was, how do they deal with it? Because if you have an advisor, you can pick up the phone and say, "Hey, listen, you told me this and it's not working out," and you can vent. How do they vent on AI?
So, I mean, to an extent, you can vent. Maybe it's easier to also. But if it's a very serious case, you can also email us and get in touch with us, and we will call you back and try to resolve the issue. We have spoken to many customers about different things that they thought were problematic. So we're not trying to shy away from it at all. On the contrary, especially at this stage, we want to address it head on. Make sure that the customers being spoken to and um, comfortable with what they are seeing.
Okay. So, on that
Uh,
insight that people will be people and investments won't always deliver, have you ever thought and said, hey, this could go completely global? And I know you talked about the fact that you're looking at expanding into markets,
yeah.
but different markets behave differently and different people in different markets behave differently. What's the what does it look like when you say, hey, let's go global?
See, I think every market has its own nuances, especially on the consumer side. So it is a very, very tricky space to get into, just, expand globally. One of the things I didn't touch on early on, and I'll just comment on it for a moment, is um, when we started, we were entirely B2C, consumer focused, right? But what we also realized that monetization through the consumer arm is extremely challenging, right? You need time. It's not impossible because obviously businesses have done it, but you need time or you need a lot of money. So we actually pivoted to also have a enterprise side of our business where we power other conversational experiences. So today we power one of the largest mutual fund houses in the country as well. So I think when you go to a new market, whether your product is successful in the current market or not, be it India or anywhere else, you need to be conscious of the fact that what worked here is not going to work exactly the same, especially from a GTM perspective, right? So having a partner, having a strategy that's coherent, and potentially even a first client before you go there makes a massive difference because uh, while capital does come, it's important to have a sustainable business also rather than just burn money. I personally, for me, India is such a massive market. Cracking it is not a 1 or 2 year journey. It'll take a decade, if not more, right? It is extremely nuanced. And as I tell a lot of people, I feel like India is more diverse than different countries in Europe, right? So I think it'll take a long time to kind of crack this space before sort of sharing my time personally in other parts of the world.
Interesting. Yeah, you're absolutely right. We keep hearing this about India being larger than a lot of markets, and there's a lot more that can be done in this country. Um,
Yeah.
Before we go into the third segment of our conversation, Kiran, just one quick thing, two things as an entrepreneur that you feel you wish you'd done differently.
Um, I think as an entrepreneur, you always want to solve impossible problems. So you typically dive into something eyes closed and, you know, really, really hope for the best and you have conviction for it. I think it's important to kind of jump into something a bit more eyes open. So even this sort of pivot to have enterprise plus consumer, direct to consumer, uh, is a change that we could have started with as well, right? It would have perhaps allowed us more flexibility on the consumer side. We started to generate revenue. So really, having that focus on bottom line is also important, not just acquiring customers, creating engagement, etc. Because without monetization, you don't have a business, and I think a lot of startups often forget that, even the most successful ones. So having that eye on monetization, I would say, is extremely important. I didn't have that when we were starting MyFi. We had some ideas on what we could do, but I think that refocus very quickly helped. So I would say anyone planning to start a business, just think about it. Also, I would say with AI, it's the kind of growth that you can see is massive, which means that your revenues can also be pretty big. I met a friend who's a VC recently, and he was saying he's invested in a company. 8 weeks after launch, they are at 10 million in ARR. 8 weeks. So it is mind blowing what's possible. So don't think that you can't monetize your business. You absolutely can, especially in today's world. And I would stay lean. You don't need large teams the way you used to. There's a lot you can do with AI within your company as well.